let's talk about where to put your money so it can grow, not just sit around gathering dust. When you start earning or saving, it's tempting to stash your cash under the mattress or in a simple savings account. But if you want your pennies to multiply, you need to give them a job to do. That's where investing comes in. Imagine you have two special piggy banks. The first one is the stock market. Picture it as a lively, buzzing factory filled with moving parts and opportunities. Inside, you're not just saving, you're actually buying tiny pieces of real businesses, from tech giants to your favorite snack brands. Every time those companies grow or make a profit, your little pieces can grow in value too. The second piggy bank is real estate. Think of it as a sturdy little house you can see and touch, maybe with a garden out front. When you invest in real estate, you're buying a slice of the physical world. A home, an apartment, or even a piece of land. It's something you can walk through, paint, or rent out to others. Both of these piggy banks are popular ways to invest, but they work in very different ways. The stock market can feel fast-paced and a little mysterious, while real estate is often seen as slow and steady, but also more hands-on. With stocks, you're buying invisible building blocks, shares of companies you might never visit in person. You become a part owner, even if it's just a tiny slice, and your fortunes rise and fall with the company's success. With real estate, you're claiming a real spot on the planet. You can see it, improve it, and sometimes even live in it. It's a tangible investment, and for many people that feels reassuring. This guide is here to help you peek inside both piggy banks. We'll use simple examples, clear language, and skip the confusing jargon that makes investing seem scary or out of reach. We'll break down how each type of investment works, what makes them exciting, and what you should watch out for. By the end, you'll have a clearer picture of how to make your money work for you, no matter which path you choose. So pull up a chair and join us at the table. Whether you're just starting out or looking to grow your savings, understanding these two big piggy banks is a great first step. We'll talk about the thrills and spills, the exciting ups, the nerve-wracking downs, and how to balance risk and reward. Investing isn't always smooth sailing, but it can be a fun and rewarding journey. By the end, you'll understand what makes stocks tick, how they can grow your money over time, and why some people love the excitement of the market. You'll also see why real estate feels so solid and dependable, and how it can provide both a place to live and a way to build wealth. There's no single best answer, just the path that fits you, your dreams, and your goals. Ready to discover which piggy bank is right for you? Let's get cracking and start your investing adventure together. Imagine the stock market as a bustling, colorful marketplace, alive with energy and opportunity. Here, instead of fruits or vegetables, what's being traded are tiny pieces of some of the world's biggest and most exciting companies. These pieces are called shares, and each one represents a small slice of ownership in a company. Companies offer these shares to the public to raise money for new ideas, expansion, or simply to grow stronger. When you buy a share, you're not just making a transaction, you're becoming a part owner. Whether it's a charming teacup maker or a cutting-edge tech giant, you now have a stake in their journey and success. Thanks to technology, buying shares is easier than ever. With just a few clicks on your computer or phone, you can open a brokerage account and start exploring a world of companies to invest in. All you need to do is deposit some money, browse through the companies you believe in, and choose the ones you want to support. It's like picking your favorite stalls at the market, but here, you're choosing businesses to back for the long run. The price of each share isn't fixed, it moves up and down every day. These changes reflect what people think the company is worth, based on news, performance, and even rumors. Sometimes prices soar, and sometimes they dip, all depending on the mood of the marketplace. When a company is doing well, maybe it's launching a popular new product or reporting strong profits, more people want to own a piece of it. This demand pushes the share price higher, rewarding those who believed in the company early on. But if the company faces challenges like a failed product or tough competition, fewer people want its shares, and the price can fall. The market can be unpredictable, and prices can change quickly. That's why investing in stocks isn't just about chasing quick profits, it's about believing in a company's future, its vision, and its ability to grow over time. The best investors look beyond the daily ups and downs and focus on the bigger picture. Think of buying shares like planting a seed. You don't expect a tree to grow overnight. With patience, care, and time, your investment can blossom and bear fruit. The stock market tends to reward those who are patient, like the slow and steady tortoise, rather than those who rush in and out hoping for instant results. So, think of the stock market as a garden for patient gardeners. Those who nurture their investments and give them time to grow are often the ones who see the most beautiful results. Now, let's look at real estate, land and buildings you can see and touch. Investing here means buying a property, a flat, a house, or even a field. You'll need a big deposit and usually a mortgage from the bank. Owning property is a long-term commitment, with lots of paperwork and responsibility. As the owner, you handle repairs, pay insurance, and cover taxes. It's hands-on, like caring for a very expensive pet. The main idea: property values usually rise over time since land is limited and demand grows. Even if prices wobble, you still own something real. You can live in it, rent it out, or pass it on to family. Real estate is a tangible asset in a digital world. It's not quick or easy, but it's solid. That's why many people find it appealing. When you think about investing, two of the most popular choices are stocks and real estate. But how do these investments actually put money in your pocket? Let's break down the ways each one can help you build wealth, and what makes them unique. With stocks, you have two main ways to make money. First, if the share price goes up, you can sell your stock for more than you paid. This is called a capital gain. Second, some companies share a portion of their profits with shareholders in the form of dividends, which are like little cash rewards just for owning the stock. Not all companies pay dividends though. Some prefer to reinvest their profits back into the business to fuel future growth, hoping that the company and its stock price will become even more valuable over time. So, as an investor, you might get regular payouts, or you might be betting on bigger gains down the road. Real estate, on the other hand, pays you in a different way. If you own a property and rent it out, you collect rent from your tenants. This rent can provide a steady stream of income, almost like a paycheck that comes in every month. Of course, being a landlord isn't all profit. You'll need to use some of that rent money to cover your mortgage, pay for repairs, property taxes, and other expenses. What's left over is your net income, and managing these costs well is key to making real estate work for you. But there's another way real estate can make you money: appreciation. If your property's value goes up over time, you can sell it for a profit, another form of capital gain, just like with stocks. This can be a big boost to your overall returns, especially in a hot real estate market. So both stocks and real estate offer a mix of income now and the potential for growth in the future. Stocks might give you regular dividends, while real estate can provide monthly rent. Both can also increase in value, giving you a chance for bigger profits when you sell. Think of stocks as a hen that lays golden eggs, sometimes small but steady. These dividends can be reinvested to buy more shares, helping your investment grow even faster over time. Real estate, meanwhile, can give you the satisfaction of monthly rent checks, plus the excitement of watching your property's value rise. When you eventually sell, you might walk away with a tidy profit, especially if you've chosen your property wisely and managed it well. Each investment has its own rhythm and rewards. Stocks can be more hands-off, letting you invest and watch your money grow, while real estate often requires more involvement, from finding tenants to handling repairs. The key is understanding how money flows in each option. Stocks and real estate both have the power to build wealth, but they do it in different ways and at different speeds. That's what makes them so attractive to different types of investors. Some people love the simplicity of stocks, while others enjoy the tangible nature and control of real estate. In the end, the best choice is the one that fits your style, your goals, and how involved you want to be. Take your time, learn the ropes, and choose the path that feels right for you. Let's look at the best bits of each. The stock market is easy to start. Just a small amount gets you going. You can spread your money across many companies, reducing risk. Buying and selling shares is quick and can be done from your sofa. If you need cash fast, stocks are easy to sell. This is called liquidity. Real estate's big advantage is that it's tangible. You can see and use it. You can use leverage borrow money to buy a bigger property, amplifying gains if prices rise. You have control, paint the walls, renovate, or set the rent. Rental income is steady and less jumpy than stock prices. Real estate can feel more secure, especially for hands-on investors. Both offer unique strengths. The right choice depends on your needs and preferences. Some people even do both. Every investment has risks. Stocks can be volatile. Prices jump up and down, sometimes for no clear reason. It's easy to panic and sell at the wrong time. If you pick the wrong company, you could lose your money. That's why spreading your investments is important. Real estate has its own headaches, it's expensive to buy, and you usually need a big loan. Property is a liquid, you can't sell quickly if you need cash. Repairs and maintenance can be costly and unpredictable. Dealing with tenants can be stressful, and empty periods mean no rent. Both paths require careful planning and a cool head. Know the risks before you jump in. No investment is perfect. The key is to be prepared. Let's see how this works in real life. Wallace invests in the stock market, buying shares in different companies. He adds a little money each month and lets it grow over time. Some shares do well, some don't, but he's spread his risk. Wallace's approach is hands-off. He lets his investments work in the background. Gromit, on the other hand, buys a rundown cottage. He fixes it up, rents it out, and manages everything himself. It's a lot of work, but he earns steady rent and the property's value rises. Gromit's investment is hands-on and tangible. After years, both have made money, but in ways that suit their personalities. Wallace prefers passive growth. Gromit likes being involved. Both paths can succeed. The best choice is the one that fits you. Which path is right for you? If you're starting small, stocks are easier to access. Real estate needs more money up front. Think about your personality. Do you want hands-on work or a passive investment? Consider your comfort with risk and how quickly you might need your money. You don't have to pick just one. Many people invest in both over time. Start with what feels manageable, learn as you go, and build confidence. The most important thing is to begin. We've explored stocks and real estate, two very different ways to grow your money. Stocks are flexible, easy to start, and can be sold quickly, but they're unpredictable. Real estate is solid and can provide steady income, but it's a big commitment. There's no single winner, just what fits your goals, savings, and personality. Keep learning, take your time, and don't rush. You've built a strong foundation by understanding the basics. Now you can start building your financial future, one step at a time. Good luck and have a cracking time.